Good morning, ladies and gentlemen, and welcome to Leadership in Insurance podcast, otherwise known as the LIT. I think we're at some sort of heady height of like episode 12 now, but I'll probably put this out in the wrong order, so I've banjaxed myself there. But I'm very lucky today to be joined by Nicholas Suhr of Kasko. Kasko is the Insurtech as a service, but it's probably better for Nicholas to introduce the business and himself. Nicholas, welcome to the podcast.
Alex, thank you so much for having me. It's a pleasure to be here, albeit virtually. Let's see what 2021 brings for physical engagement again. So my name is Nick. I'm CEO and co-founder of Kasko. As you've said, we do Insurtech as a service, and in a nutshell, we help insurers and MGAs to design and scale digital insurance products. Now, our definition of a product is pretty wide, so it comes from advisory workflows, quote bind, complex underwriting, policy management, any form of reports, consumption of third-party data, you name it. So anything that is required to set up the product, engage with your distribution partners, the end consumers, and then the capacity providers on the other end. We're a team of 40 based out of London, strong footprint in continental Europe, and had a very interesting year.
Yeah. Well, we were just talking about that, and I thought you used a really interesting term because certainly from a recruitment standpoint, obviously that's my avenue into the industry. Lots of things kept going, but lots of things get put on hold. And you used the term that there's a sort of maybe a debt that built up. And I thought that was a really interesting use of the term because I think the industry's got some flack, but they seem committed to making these changes, but maybe this year was just a time to pause, maybe on some cases.
And to be honest, I get it. When shit hit the fan, around March, I remember I was still very close from booking a bunch of meetings, and in a window, I think over a weekend, it went from, of course I'm going to take that meeting, to absolutely bizarre. Of course I'm not going to take that meeting. It was a very short time frame for me around March. And I think quite understandably, I think all of us took a breath, and I think we held it for a little bit because we just didn't know how much of the rules had changed. And so what we saw delivering technology at the intersection of product distribution and end consumers, be that commercial or retail, we also saw that insurers were keeping what they had planned, but they were also somewhat reluctant to kind of do the next batch of changes and transformation. Now, a couple of months later, and the year is not finished. Most of our insurance partners have gotten through the crisis quite unscathed. They have done a lot of investment around digital advisory, but what all of them have kind of looked at is to say, listen, next year is going to be similar or better. And I think they've developed, put up a debt, and I think next year, 2021 and 2022 is going to be very interesting. Now, I don't think it's as similar than, maybe it's not exactly the right analogy, but maybe a little bit like weddings. People didn't plan for as many weddings this year, but you still are going to get wed. So next year, it's going to be quite a few weddings, and that demand is going to be recouped. It's different than a haircut, because you're just not going to get that past haircut back. And I think something similar is going to happen within insurance, and we're looking very bullish into next year.
Yeah, fantastic. I think you're absolutely right. The wedding analogy is brilliant because I've got about 3 that I think have been pushed back this year anyway. So I'll be fitting that in, but only if we're allowed to travel because they're all in Europe. So we'll see where it goes, and certainly Europe will be a different proposition as well. But let's not even start on that line of thought. Well, you and I spoke before, and I thought it was really interesting. We had a conversation about innovation, and I've got a sort of certain love-hate relationship with the word. So I kind of wanted to ask you what innovation means to you in the context of insurance.
Sure. So, and I think that's very important because everyone has a different word for it. I have more of a hate relationship with it these days because to me, innovation is sometimes used as an excuse for action. It when a lot of people who've never innovated hear the word innovation, they have this abstract term about something absolutely flabbergasting and truly disruptive. And if it's not that, then it's not innovative or worth anyone's time. And I think it's the wrong way of looking at it, because at the end of the day, anyone who's ever created knows that it's not that singular eureka moment, great idea, and then just executing it until the finish line, but it's a series of experimentation, insights, reconfigurations, and putting things together that then just seem to be novel. So in a corporate and in insurance corporate context, I think the word entrepreneurship is a much better encapsulating, because it is forward moving, it is creative, but it also encapsulates the need for trade-offs to get shit done, rather than, you know, going into the co-working space, wearing red shoes and doing a design sprint. So I think, and a way to kind of test that is, do we have a clear goal? Because it should have a clear goal. Ideally, it's measurable, but and quantifiable. But is there a real goal? You know, 12 months in, how do we look back and say, was this successful or not? And there's leading indicators and lagging indicators. And, you shouldn't start with an ROI on a new stuff, on a new product line. But it doesn't mean, just let us do, and, we cannot be measured, because that would constrict our creativity. And I think the second aspect is, if it's new to you or your organization, it's probably worthwhile engaging in that activity, because especially in insurance, I'm not even sure whether it's a first mover advantage industry at all. It's a fast follower industry.
Yeah,
that's for sure. And if you can get that done, well, good for you. So it's those two aspects, what does success look like? And is it new to you? And if you can, please exchange it for intro entrepreneurship rather than innovation. But that's just my 2 cents.
No, I mean, it's come up a few times with me, and I think it's been hijacked a little bit by technology, and that's just broadly in the sense of how it's written about and talked about. And you'll know better than I, but my experience of, I used to work in the insurance industry, and we brought in some new technology into the business I worked in, and it was a disaster. It wasn't innovative. It took us backwards. It was slower. So technology does not equal innovation. I think that's one of my big things. And secondly, I like the term I've been coming up with lately is effective innovation, and which is, it, I suppose, goes to your point of having a measurable purpose and having a goal, because just innovating for the sake of innovating isn't worth it. And also the scale of that innovation doesn't need to be very big. It can be a very small thing. And someone reminded me the other day of the guy that's, when you buy a box of matches and they've got the strike plate on one side. Well, apparently they used to have the strike plate on both sides. And then one of the best moves ever, one person went, well, why do we need the strike plate on both sides? It costs us too much money. Profits went up overnight. And so, change, innovation, entrepreneurship, and taking an entrepreneurship, I think, is really interesting in the context of big businesses, because it says something about responsibility. I think is ownership of a problem. So yeah, I find that really interesting. And you've kind of touched on it there, because incumbent is large insurance businesses. Can they truly innovate, or is it really difficult within the context of those organizations, do you think?
So we certainly have placed a huge bet on that they can, and that they will. and that they will look at it more in terms of a network of services rather than, unless I'm paying someone a salary, I'm not going to consider what they're thinking, which is, I think make or buy is just such an, it's not a principled decision, right? It so matters around what's on the shelf, what's the opportunity, what is your portfolio of opportunities. And so I find, looking at it on a case-by-case basis the same way we do, and feeling comfortable that maybe your make or buy decision this time might be different 2 years ago and 2 years' time. And that is absolutely okay. That is not a lack of strategic oversight. That is just very good business acumen. Now, I think the main, and people talk about legacy and all these things, but I think our key bet is, because of the insurance product and the customer engagement with the product, which is delayed, it's very low touch, and quite frankly, that's okay. The best UX of an insurance product is probably an insurance product that you don't have to engage with all that much. And if you have, it's pretty streamlined, but it also needs to be accurately priced and to your situation. Now, I think because that is so slow, at least for the last 5 years, any direct to consumer insurtechs have somewhat struggled to create a truly compelling story. And I would personally, and I think it's great, I would put Lemonade into that bucket. If you're kind of looking at the numbers, and an insurance company, whether it works or not, you need longer timeframes than a technology business. So I think helping insurers who have access to customers, distribution, brands, and helping them to innovate in a pragmatic way, I think is the way to go here, because that's what the market is structured. And I think there are certain building blocks or stumbling blocks that anyone who wants to internally or externally needs to be aware or be surprised. I think number one is that, and you've said it, ownership or responsibility. Now, for that, you also need to have the freedom you also need independence. So because of insurance companies' functional setup, in order to spin up a new product, you need to have product, pricing, claims, distribution, channel A to Z, marketing, legal, IT security, everyone included. And each function has a different optimum. So whoever's making that decision needs to be able to say, I want to ship quickly, but maybe not fully automated. Or I'm happy to take if I only focus on a certain distribution partner, maybe some of my regulatory complexities are reduced, et cetera, et cetera. So you need to have that independence to also have that ownership, because otherwise it's like a fake title. So I think people need to be aware of that. I think the second one, obviously, is technology. Insurance companies have and are investing a lot into updating their core systems. And that is a process around standardization, around reducing complexity around the known. Now, new business is fundamentally a bet on the unknown. So I think you need to make sure that you do not try to have the same resources for both measures. I think you need to kind of separate and then build bridges as and when the new business opportunities scale. And then I think the third one is that, and we've mentioned, is even though you have all that, let's say, responsibility, it's still a multi-stakeholder business. They have the core business, they have new business. So whenever you decide to say, I'm going to charter this new path, be very clear on what success looks like in 12 months' time. Because if they say it's time to market, or it's number of users, it's profitable, be very clear about that at the beginning, because that's, you can foresee that situation. So you're in sync. And I think if you get those three things in place, you're very good to go. And what I also see is a change of the guard. So 5 years in Insurtech, lots of good ideas, lots of good people, and you see insurance carriers kind of trying certain things and optimizing on their trial and error basis. So I think that room is being expanded, and big and medium-sized players are getting kind of moving some legacy pieces off the board to allow the change makers to drive change. And I think that's super exciting. And we're just at the beginning of that change truly materializing across the insurance value chain.
Mm-hmm. Yeah, it's been really interesting time about the kind of timeline. I think that's something I've noticed. And I think about when I talked about ownership, and you mentioned it there, one of the kind of conflicts that I've seen is that when we started on this process, particularly when looking at kind of Insurtech and whatever you want to put that as encapsulating, but within the incumbent business, you had a conflict because you were bringing in new people with different skills sometimes. Let's say one of the easiest ones to look at is like data science, and you're bringing in data science, machine learning engineers, and you're putting them in the insurance industry, and no one knew where to sit them, under which column. And that was some of the problem, because you might get a data scientist come in and you put them into the actuarial team, but then they're driven by actuaries are trained as actuaries, and they think in the way that they're trained to think about the data sets that they're trained to look at. A data scientist isn't thinking the same way, but they're driven by a leader that thinks that way. So you have these internal conflicts, and until you kind of have that defined, either a defined goal or project that they can work on with freedom, or you sort of give them freedom from a leadership standpoint, then that change can't be effective, or that person is potentially held back by the structure in which they've been plugged into. But I've seen that change. We've seen distinct data science and machine learning teams that are separate from actuarial teams, for example. I don't know.
And I think and I'm not going to play Captain Hindsight here, which is a great South Park episode, by the way. Because in retrospect, everything is just kind of clear, and the truth is also whether something, it's not always just a structural. It's very seldomly actually a structural problem, but it's a change problem, an organizational problem. There's political endeavors. There's all kinds of things in that melting pot. I think if I want to drive new business and change, I think the key aspect to structurally set it up is to say, I have repetitive cases that I stress against the existing way of doing things. So if you'd say where to put the data scientists, I don't know. Could it be that the actuarial department is awesome because you have exactly that right leader who is blend of both worlds, and who has that great organizational footprint, and knows where where the skeletons are buried, and just is able to drive change by his shared cloud, his or her shared cloud, or not. Now I think if you're setting it up is to say, the probability of the first configuration being the best configuration is really low. Mm-hmm. So you have to do it on a continuous iteration thing. And that is, you need to slice it up in smaller bets. And then you can, it's a little bit like water, and it'll then find its way.
Yeah.
I think the second aspect around this is, if you're kind of looking back, most accelerators, innovation labs have not delivered up to the expectation in terms of driving change, driving new business. I think on the strategic investment VC side, pure financial returns to be seen, but the strategic aspect, other than the investment horizon and understanding the business model, which is very important in insurance, the kind of connection to the business units and that strategic value add most of the times also hasn't been delivered, because if you're putting it too far outside of the organization, there's no interaction. And if you're just going, in Germany, you go to Berlin, right? Insurance is kind of in Cologne, Hanover, and Munich, but startups is in Berlin. And just because you have some dudes in Berlin doesn't, it's not going to change anything. So I think what works from an organizational and kind of what we touched upon on the kind of structuring on an entrepreneurial thing, if I were to set up let's call it a new business entity, because I think that's really what matters. And by the way, that new business can be internal optimization, but it needs to be structured in a way that someone else, not just me, the insurance organization, is also willing to buy that service, right? So it needs to be market ready to do, and then you might just have a really big customer to start with. So I think the best case for this is set it up as a fully owned MGA. With that, you have all the licenses, the decision-making to create insurance products, sell insurance product, or administer certain parts of it. Have that MGA, that management team, give them distinct investment and budgetary control. And then they can decide whether they go across the existing distribution channels. Can they convince enough tied agents? Can they convince that new bank assurance? But can they to showcase that how much, okay, we know that insurance products probably should be faster and more digital and more flexible, but what does that actually mean? How much faster? How much more? Do I need to build an insurance product in 2 days? No. Probably should be, 18 months, too long. But where does that sit? Is it 2 weeks, 8 weeks, 12 weeks? Who knows? Because otherwise you're just building up this tool or toy that no one's really needing. And the same way can go if you're more on the optimization thing. If you think that I don't know, claims AI is really kicking, okay. You use that claims AI, you give a flat rate per claim regulated to your entity, and you'll see whether you can make it work on your own P&L. That's how you drive change. That's how you drive. And I think that's actually, I see a lot of interesting discussions around that for both insurers spinning this up, but also large brands spinning up their own MGA entities to design the product specific to their data and touch point structure. And that's going to be really interesting. And that doesn't mean that you'll replicate certain resources. Quite the contrary. A good MGA takes all the support that their capacity provider can give them.
Yeah.
I mean, I don't need to hire an actuary. I can get that from the reinsurer or the primary insurer. And I'm not even going to do claims regulation if I don't have to. But maybe in order to prove my point, I have, like a first layer of support, so I can understand it. And so basically you have, you pick up where you cannot convince your capacity provider, your investor in this MGA to reallocate resources, and you'll put some of your own resources. And the same goes to IT, but you're doing it only if you're believing that investment time and cost is better, because otherwise consulting is always easier than doing. And here you're kind of getting into the doing and putting your money where your mouth is. And that's really powerful.
Yeah, and there's something there that I had to ask you. I mean, I had written down how do customers drive change, and I suppose that's primarily the question I wanted to ask you. But it's really interesting because it's a broader question probably about how much feedback should drive change, and not just, and you kind of said it there on sort of objectives and are you hitting those objectives? And I sometimes feel that's the thing that's missing. That's the thing that holds
accountability is important.
Yeah. But the lack of a feedback loop, because if you're expecting ROI year one on this new product, and you're not measuring all of it. And then what happens is these projects start, they don't deliver a return, they get shut down. And then you'll be talking to people and anecdotally, everyone will say, oh yeah, but the system we created for managing claims was fantastic. But it gets abandoned, lock, stock and barrel with the whole thing. So, is that, well, I suppose we've kind of covered it in terms of, that's the important thing, is getting those feedback loops right. And I think in this day and age, being able to record all these different data points, the challenge is sometimes identifying which ones you should be paying attention to.
And if anyone knew, we don't have the crystal ball. And I think the whole point is, we all know that it's about grit, passion and perseverance, right? That's really what's at the heart of all of this. But sometimes the timing is not right. So I know we've worked with the large insurer, and we've created a pretty cool product. But it was set up in the innovation department, and it was set up in the beginning not to fail, but to not give it enough room to grow if the first hypothesis weren't validated. And it needs to be sold through tied agents to existing customers. Tied agents had different issues. They didn't want this. There was some political stuff going on, and it was shut down. That was it. We had one shot. And whether the problem with this is, I don't even know whether we have a false or true negative here. I just know that hypothesis was wrong, but you could have taken this product and trying to white label it, go to a different market, do all kinds of things. And out of it, something else can grow. But unless you give the people the freedom and the accountability to not have excuses, to then say, you know what, this didn't work. Because now that whole aspect, it's like the zombie project. It didn't work this time, but it might actually resurface. And and then because it's still someone's pet idea. So I think it's really key to give people options. And the reason why I think it's interesting for us as an external party, sales cycles are super long. It's really frustrating. Things get started on, but because we can pick up enough demand along the line, we don't get frustrated if a conversation has been going on for 4 years. Because this was not the only conversation. If I was hired into an organization with that promise and nothing gets done, then that's just really toxic for anything you're trying to achieve around change, around growth, around new business. And that is why I think giving it their own entity with their own P&L, and at the end of the day, someone needs to say 12 months in, do I get more cash? Do I even need more cash? And what is it for? Do I abandon it? I think it gives people a focus, because I can tell you, we also refocused. For us, it's value is being created if someone's willing to pay for it, rather than just talking to us and having leads and everything. And that's I don't think that's unimaginative or not creative or non-visionary. It's just very pragmatic, because for us, we're in enterprise sales, and unless someone is willing to give you some money, it's not going to work out, because they'll have to there's no buy-in. They'll have to convince other entities or stakeholders in their business. And so I'm really, and this is crystallized. I've been doing this for 5 years, and this kind of MGA setup, and we're actually helping corporates setting these up these days, has just been something that dropped in my lap, and all of a sudden I was like, that's the problem. Because I was the consultant myself and said, this is what you should do. This is what you should do. Having seen it, it's like, why don't we just co-found an MGA, and I'll decide. As a person, I'll be liable, because that's the other thing. In order, accountability. If your legal department says A, I think it's B, I can make that decision in B, and I'll stand there with my name. And that's very powerful. That's a development I certainly did not think I would do 5 years ago.
I think it's really interesting how I think the insurance industry, this is my complete conjecture, but look, it's my podcast, so I can put my opinion out there. I think you're looking forward. I sometimes wonder if insurance realizes as much that the game is changing, that there's two ways to be an insurance business these days, which is a capacity provider, which is really a sheer capital play. I mean, you're seeing this more and more, aren't you? Pure capacity plays that either are utilizing MGAs or technology and having very little in terms of kind of actual staffing or infrastructure themselves. They're kind of using it as a sort of hedge fund type structure.
Yep.
And then the other way of looking at it is that you are a technology business, and your service or product is the insurance industry. And what I mean by that is that the provision of white labeling products to allow brand to sell insurance, and we're seeing more of that. And then if you look at culturally how good technology businesses tend to be set up, they're built around minimum viable products. They're built around continuous iteration. They're built around allowing people freedom and ownership to have, 20% of their time spending on their own pet project, as long as it kind of has a goal and there's a budget for that. And look, insurance can't have as much freedom as that because of the regulation, right? There's regulatory responsibilities. It's very difficult, and so I'm not saying that you can just rip up the rule book, but the shift towards those things, it needs to happen, I feel, because otherwise you risk. I mean, I was looking last night at white label products that are available to non-insurance entities. They're very good, some of them. And you go, what's to stop you building a massive brand and footprint on, any kind of product or service, and then just selling insurance on the side? And it could be death by 1,000 cuts to the industry.
Totally. And I think, but I would probably expand on that a little bit. So I think the capacity play, absolutely. The technology play, personally, I don't think that insurance companies are technology companies by design. I do believe that insurance as a service, white labeling these is very interesting. People call it, it's B2B2C, affinity, embedded insurance, that whole aspect. Bank assurance is an example, and I think that there's going to be some significant growth in that. And I think this is different per market, and maybe this is because I come from continental European markets where insurers very successfully have tied agencies, which is from a UK perspective nuts, yeah. Right? But markets. So I think insurance companies are also very strong distributors of insurance, either by having their own agencies, by serving to brokers, by try to make a distribution deal with HSBC. It's not that easy, just having a cool API. There's different things at play here. So it's a big boys game. And so I think it's definitely that distribution. Underwriting is very key. Underwriting discipline, underwriting savvy, that is partnered more with data, product design, etc. So to me, underwriting, product design, technology, data science, actually, that's all one thing for me, right? It's to price and deliver these products well. And the third aspect is, I'm going to leave out the investment side because I think that's used to be cash flow underwriting when I was at uni. I don't think that's really a thing anymore. Who knows? But the third one for me is service orchestration. You'll do this, if you're looking at how to regulate claims. That is super complicated. That is very hard to replicate. And having these assets at play is really interesting. So I think insurance companies do not have to be, and probably shouldn't be, technology companies in the same way that most e-commerce companies are not really technology companies.
Oh, yeah.
these days. They had to be, and certainly Amazon is, but there's so many, the next one is Shopify. They'll deliver you with the technology. And so your marketing, procurement, they're all service entities. And I think not everyone can be Ping An. That's okay.
No. But I think Amazon was probably where I was getting to. I was like, there's nothing to stop one of the huge incumbent insurers saying, what are we? We're a brand. We're a capacity provider. What's to stop us owning the insurance as a service, insurance technology as a service function, in the same way that Amazon's made such a big dent in the technology place with
And I think the interesting thing, and that is where the normal strategy consultant playbook is, right? You're either a pipeline business or you're kind of a distribution brand business.
Yeah.
And the reason for it is that orchestration, unless you focus, orchestration is too complex. I think this is technology, microservices, APIs have somewhat counterfactualized that.
Mm-hmm.
No, counterfactual is probably not the right word, but they've kind of weakened that very black and white analogy. Now, I think insurers, and let's take embedded insurance, which is the best insurance company or partner for someone like Amazon.
Mm-hmm.
Now, what you'll need is, and I call it, in strategy, we had like a T profile, right? So you had a kind of broad, and you were had a very good depth at something. Now, if you're looking at like a big business like Amazon, first of all, you have truly international aspects. So there's no way that one insurance group will be, and let's just take one product. I don't know, smartphone warranty insurance. There's no way that a single carrier can be, from, I don't know, Sao Paulo to Hamburg to Minsk,
mm-hmm.
can have that best product design, pricing, fulfillment. That's just not going to work. So whoever's partnering, and that's, to me, it needs to be that virtual MGA that can be owned by an insurance, who's probably co-owned with Amazon, probably as a minority shareholder, and you're organizing this for, first of all, to get the products across all geographic countries. You then have very different product footprints. Warranty is easy, but what about all the hundreds of thousands, if not millions, of sellers on the marketplace?
Yeah.
Here you need to provide, and not just e-commerce insurance. Maybe they have a shop. Maybe they're hybrid businesses. So it's a tremendous e-commerce opportunity. Again, SME insurance, truly global, across all, not going to work. And then, you have different items around. We all know that insuring a smartphone is slightly different than insuring a car. And so you have kind of these different product lines. So I think there is a true need for these big distributors to put a virtual orchestrator in the middle. Who can access all the products, because and even if you had all of this orchestrated as a capacity provider, you would have fun exactly for 3 to 5 years, because you would orchestrate everything for Amazon. And on those cases that would work, you would then be in RFP hell, because Amazon would relook and say, okay, so you're making 15 cents on the dollar here. That's not customer centric. You'll make 2. Because I now know, so you'll be squeezed out of all of the point of view, as is happening in OEM business, in retail business, in travel insurance business. It's a pure volume game. Now, obviously, being low cost, having scale helps. But there is a secondary aspect, and I think that is the truly interesting nature of it. I think it's then to see how can you move a customer from a smartphone insurance to a holistic insurance experience. And that comes with product, with processes. This comes with people. This comes with advisors, because not every target audience and every product. Sometimes just asking a person, especially if you don't have to ask them 5 times a day, but maybe 5 times in a decade, is the best user experience.
Yeah.
And so designing this to get geographical and product footprint, but then also at the right time, let the customer self-serve, but also advise the customer to increase the cross and upselling. Because the interesting thing, and people will realize, the cool thing as an insurance intermediary is recurring revenue.
Yeah.
I mean, it's almost, once you've had a book of business and you stop writing it, it's nearly impossible to get rid of your customers.
Yeah, of course.
And so I think that is super interesting. And so the right insurance carrier these days decides which play they want to do as at the big boys game, but does get their hands dirty, and the reinsurers do it, to kind of say, how do I get from POS, putting people on the phone? I need to understand this, because if I'm always, just four areas of subtraction away from what's actually happening, if you go to a reinsurance company, a good insurance product is slightly more challenging than a good pro rata risk sharing agreement. That's not what sells insurance. And unless you understand that, you're not going to get the interesting plays, or even understand which partner is the right one for you to engage in this.
Yeah, quite. It's got my mind thinking now about Amazon taking over the insurance market, which it'll inevitably have a crack at. But but yeah, I think that's an interesting point to sort of come to close on. I had so many questions, and I think we've covered them, like, by picking them off. But I think it's such an interesting point, and I'm really looking forward to next year, because I think that's it. I think some things have been put on hold, and we're going to see a lot happen. But it's really positive to see the fact that your business has been successful. I think that in itself is a good barometer that the insurance industry is changing. Because and likewise, I was just thinking about, because I was smiling when you said recurring revenue, as a person that goes project to project, just going, wouldn't that be lovely?
It's pretty sweet. I can tell you, it's pretty sweet to have a blend.
Yeah. But look, I'm looking forward to 2021, and looking forward to seeing what you guys get involved with. But I really want to thank you for spending the time with me, Nick. It's been really interesting to dive on those things.
Thank you so much.
And we've probably upset some people about innovation labs, but it's fine.
and to you guys out there, let's have a chat. It just needs to be slightly mended.
Yeah. Mended is a good way of putting it. Thanks, Nick. Appreciate your time.
Thank you so much. All the best. Stay healthy.